Right then everyone, let's get into it. So today we took our first trade on the challenge. It was a loss. There's nothing really else to say about it. I think personally it was a good trade. It was in a key area of resistance. The market had been overextended for a long period of time. I seen a bearish candle come into the market. My thoughts were overextending market, but albeit that the 5-minute structure wasn't all that good, to be honest. But I thought, I see the setup and I'm just going to take it. I look for the pullback on the new 4H candle and I wanted to see the flip bearish. I literally just got stopped out by, I don't even know, it went back past my stop loss by half a pip. Not probably something like that. I don't even know what it was. And then obviously tanked, so it would have been a break-even trade anyway. But you know, it's just one of them things. This is trading, and you know, no hard feelings. This is the great thing about this 10 grand account. You can really collect some data. There's no emotions attached to it, and I feel like it's a great starting point for somebody. If you're not really done any trading and you want to get your mentality right, 10k account. You know, it's not that much money. You can get it for like £76 on ftmo, and you know, just place the trades. Get into the habit of just hitting them buttons, buy, sell. You know, just take the trades and see what happens. Albeit you've got to have a good strategy, and I have a pretty good strategy which I'm pretty comfortable with. Albeit today it didn't work out for me, but you know, it's besides the point. Not every trade is going to be a winner. For example, you'll take 10 trades. 6 of them trades out of the 10 might be winners, 4 losers. So let's say 60-40% win to reward ratio. 60%, 40%. How do you know that you're not going to get 4 losses in a row? You don't. Because that's just the way that it is. If you take 20 trades, that means that you're going to lose 8 trades out of 20. How do you know you're not going to get 8 losses in a row? You don't. It's all about probability within the markets, and the only way to beat the odds is by consistently executing on your strategy, taking the trades. And that is it. Because if you're not consistently taking every single trade, which you should be, you might end up taking the trades which end up being losses and not taking the ones which would have been winners. And I've done this before. I've been in the position where I've not took the trade and it would have been a win. And then the next trade I've took has been a loss. And then everything starts falling apart because you just end up in a rut and you start just thinking, I can't do it. But really, if you'd have just stuck to the plan and executed every single trade when you should have been, the results would have been speaking for themselves. So anyway, enough of that. We'll get into the charts now, and we'll show you the setup this morning and go over some other trades. And excuse the burnt nose. Got a bit of a burnt nose from work. Been getting frazzled. Anyway, jump on the charts now. Right then, so here's the trade from this morning. Now, I will show you my thoughts and process behind this trade. And, you know, some may say, well, why are you selling when the market is up? And the reason I sold is because the market has been going up for a long period of time. Look at this. The market is overextended. You go into the 5-minute, and like I say, the 5-minute structure wasn't the cleanest at all. It's just choppy and horrible. Maybe I shouldn't have took it, but the whole reason, like the whole thing here, is I've just got to take the trade when I see the trade. If the opportunity is there, take the trade. Because I'm sick of being in a position where I don't take trades and then I should have took them. It always ends up being the hardest trades to take are the ones which you should take, and the easiest looking setups are the ones that are losers. So I'm not having it anymore. I'm here to collect data. I'm here to trust the process and you know, see what we can do with this strategy, because I know that it works. So anyway, it was the setup this morning. Like I say, the structure on the 5-minute was rubbish, but what I was seeing on the 4-hour, the market was overextended. We'd pushed into a key area here, and the bearish momentum had kicked in. So, you know, this is the 2 till 6 a.m. candle on the 4-hour, and I thought, you know, why the hell not? Why the hell not take the sell? It made sense. Maybe it doesn't to you, but to me it made sense. Overextended market. Look how long we've been pushing up here without any pullbacks. Anyway, So this was set up. This is the final candle of the 4 hour of the 2 till 6. So this is the final candle of the 5 minute, and this is the close. So I'll just waiting to see my pullback on the 5 minute, which is what I've seen. So I presume that this is where I was looking to get in. So I set my stop loss, not my stop loss, the sell stop entry, and I was looking to just get triggered in with momentum. So I've just gone into the 1 minute here now, just to show you. So got triggered in, of course, back into a bit of profit, back into the stop loss, up, down, obviously got took out, literally got took out there. So I got took out with the spread. Perhaps I should have gone for a 7 pip stop loss. Maybe I wouldn't have got took out. Anyway, that wasn't the case. So I got took out, and then of course, as it does, the market tanked. Really what I should have been looking at is thinking, well, perhaps I can take this as a bit of a double top. The market, the structure was not the best at all. I understand this, but it doesn't matter. Here to take trades. Anyway, it would have been a break even. It would have been a break even trade. Let me just get rid of that. You know, it was 50% in. At 50%, I'll move my stop loss to break even, and then it would have got stopped out. So it would have been a break even trade, but it is what it is. It is what it is. So going forward, this is where the market was moving today on GU. I trade GU and gold. So you see there, the bullish momentum was stepping in, but I never took this trade because what I've tend to find is when you see the market pushes up, on GU anyway, when we get a good break like that, a lot of the time the next candle doesn't tend to continue. You want to see a little bit of a pullback. So I hesitated on that, and of course, you know, my thoughts and processes behind this was right, so I didn't take the trade. But then I wasn't really thinking about it at this point, because really, you know, I'd have liked to, say if I'd have seen this candle break and close back into structure like that, like so, then I would have been looking for the sells. Breaking out and breaking back in shows that the sells would have been strong in the market. Anyway, that didn't happen, so I didn't really have any interest in it. But the next candle after this, oops, I just realised what I did there. Yeah, the next candle after this was bearish, so let's just go on to this. So the next candle after this was bearish. Let's do this. Oh, it's just doing that, innit? Forget it. Anyway, this candle was bearish, but I probably wouldn't have been looking to take that trade because the market was still up. But at this point, when you're taking out your higher low here, like this, then this would have been more of an interesting trade to take for me. So what I would have been doing, oh, it's an awful time to take a trade, I'd have been looking for that close, like so. And you don't really want to be taking trades at this time. And this also would have been a bit of a difficult trade, just because you've not got much pullback. But on GU, you tend to get a pullback between 2 and 10, 12 pips per wick. Now look, this is what I'm looking for in my trades. Let's have a look at this here, for example. Bullish candle, we're looking for the next to be bullish. We create a wick on the bottom. This one didn't, but a lot of the time you will see before price pushes up, you create a wick, create a wick, create a wick, create a wick. Yeah. Same when market's pushing down. You create a wick. Well, alright, that candle's not bearish, but here. You create a wick, pushes down. Create a wick, pushes down. Create a wick, pushes down. Here, creates a wick, pushes up. Creates a wick. You get the point. If you can rinse and repeat this process, it can work great, but it's just working out how far back is it going to pull. Well, you don't know, and the only way to know is to just hit the button, buy and sell. So this is where you would have been looking at with this. You know, it's not the best. It's not the best. You like to see a bit more of a cleaner pullback, but hey ho, you know, the question is, at what point would you have been getting into this? So this would have been the final candle. Would you have been waiting for the pullback there? Would you have been waiting to put your stop entry here, with your stop loss above here, like so? You don't really know. at the end of the day, this is something that which you need to work out for yourself, and which is something I'm continuing to work on, of course. But this could have been a trade. It is at an awful time, but, you know, you get the point. The thing is as well, you know, it all depends on what you're trading, because you could be trading on the 5 minute on the structure like this, and you're just looking for those simple setups, which is something which I'm really considering. Why the hell could you not be selling here? Like that. Why could you not be selling here? Like this. Because you're just looking for lower low, lower high, lower low, lower high, lower low, so on, lower high, lower low. That's the way that the market works. You could be getting in on these trades, and I could be getting in on these trades and capitalising off these moves in the market. Look, you're waiting for price to break, pull back, bearish momentum, step in, you're looking for the sell. You're waiting for price to break structure, pull back. It's not been the greatest place. I mean, it could pull back up to here to create a double top. But, you know, look, momentum's breaking, closing back below structure there, and then you're getting the push. Anyway, that's enough of that. That was today's trade. Go on to here. You know, we've started the challenge. We are 1% down. 1% down. We lost just over 1% actually. So yeah, that was that. That was today's trade. Look, I've actually done it on MT5, and I didn't mean to do it on MT5, but it is what it is. I've never really used MT5. I prefer MT4 for its simplicity, but I'm sure I'll get into it. So yeah, let's go. Trade number 1 of the challenge, 1% down. So let's see. Tomorrow's a new day. Many new opportunities. Thanks for watching, everyone. I'll see you in tomorrow's video. Take care.